In this video, I'm going to show you how I'm going to double my portfolio as quick as possible. You can do the same thing, but it is really high risk and it is very controversial. A lot of people online say not to do this. It's a very risky stock, but this is not financial advice. This is just to give you an idea on how I'm looking to increase my portfolio as quick as possible before I retire in, let's say, 20 years. Before we get into the video, please hit that like button. Also subscribe if you haven't, and also make sure you comment below. Let's have a discussion about this, what you think of this stock or other stocks that use this same way of generating income, and let's go from there. So we're on my trading 2-on-2 portfolio right now, and how I'm going to double down on my stocks is using a covered call stock. So I'm using QYLP. QYLP is a UK version of QYLD. So exactly the same as QYLD, but for myself it is tax free. So holding this stock, I basically earn dividends tax free as it is a UK version. So if we zoom out here, as you can see here, it is not a growth stock or anything like that. It pretty much just bounces between the same line really. So you can see here the average price I pay for the stock is that grey dotted line, and as you can see it's just up and down, staying fairly along that same line. So it's not massive gains, massive losses, which I'm not too fussed about. I think around here I was up about, I think I was up like £50, something like that. And as you can see where it is now, I'm currently down £42. So it ain't too bad going like that way, the way it bounces back and forth. So as you can see here, I've got 141 shares. Currently hold £1,795 on it. And you see there the average price I pay is £12.96 a share. It pays dividend every month, so the ex-dividend date is the 1st of August. So pretty much if you own it before this date, you will earn dividends on the payment date. So you have to own the stock before this date to be paid on the payment date, and that's the amount it pays per a share. So we'll jump across to my my dividend tracker, see what the dividends is like, and we'll also compare it to the monthly paying dividend. So as you can see there, we've got 1,700 in QYLP, and I have £4,770, which is pretty much down the same amount as QYLP. I've just got pretty much £3,000 more in So here we are over on my dividend tracker. This is the year of 2023. So you can see I bought into QYLP September, and then start again paid October. So I had 51p, 50p, and then I must have bought, I think I sold a stock and then pretty much bought into QYLP. That's why I had a massive jump in dividends. But if we scroll into 2024, so here we are, 2024. This year, I've already made £100 in dividends. So you can see I've got £12, 15, 15, 15, 15, 14, 14. So the dividend difference every month. It just depends on how much money they make each month, or however they buy and sell their covered calls. This is how much I'm earning each month, and as you can see in that, in my trading 212 portfolio, that the stock was costing £12.96. So I pretty much every month this year I've pretty much been getting one free share. So 1, 2, 3, 4, 5, 6, 7. So that's 7 shares I've bought this month from just auto investing this. And obviously it's going to start doubling. Obviously, if I kept it at that and didn't invest the rest of this money, I would just be getting £12 every month pretty much for the year. Because that's getting reinvested, it's increased here because I've got an extra share, and then that's been reinvested and I've got there. And obviously now each share I'm buying, I'm getting paid an extra, I think it's 17 cents or 17 pence, whatever it was a share. So you can see every month I'm adding 17 pence to my dividends. And obviously it's going to start doubling. So soon, once I start getting this to, say, £24, £25, then it's going to start increasing even more, because each month I'll be buying 2 shares, and 2 shares will turn into 3 shares, 3 into 4, 4 into 5. And you can see then every month I'll start getting £1 every month, or like £100 every month. £100 will start buying me, I don't know, like 10 shares, and then 10 shares will turn to 20 shares. And you can see how this is going to quickly increase over time compared to others. So let's just say Coca-Cola here pays me $4 in April, $4 in July, then it'll probably pay me another $4 in October. And I'm going to earn $12 all year from Coca-Cola. But I don't mind, because this is a growth stock of mine. QYLP is something I'm using to double down and increase my portfolio as quick as possible. And then once I start earning like $100 a month, I will start investing this into Coca-Cola or Bank of America, let's say, and really start growing these stocks. But at the moment, I'm just doubling down on this, get a dividend as high as possible, and then I'll start investing it into the other stocks. But to compare this to O, here is O in this column. So I'm getting £14 here in QYLP, and I'm getting £18 in Reality O in ticker symbol O. And the big difference here is I own, what was it, like just shy of £3,000 more of O. And I'm only getting £4 more. So this is going to increase a lot quicker than this will in the long term. But I'm hoping this is going to be a growth stock as well once the interest rates come up. So this is how I'm going to increase my dividends as quick as possible going forwards. So what's your thoughts on QYLP or QYLD? Chuck them in the comments section below. I'd be interested on what you think of covered calls, ETFs, covered calls stocks, or if you have a different way of how you're doubling down, then I'd like to hear that as well going forward. So please like this video and chuck them in the comments below. Again, thanks for watching, and I'll see you in the monthly update in a couple of days.